Welcome back. You're tuned in to Bazaar Morning Call. Well, let's focus on Cyient DLM. They reported a pretty good set of numbers, though margins had a bit of a one-off that played out there. Mr. Anthony, the CEO at Cyient DLM, joins us on the show. Hi, sir. Good morning. Thanks a lot for joining in. Well, the margin had a bit of a cushion out there and a one-off. I think that would have impacted or boosted up margins by close to 200, 250 basis points. X of that, what's the outlook you're looking at with regard to margins? Will you expect to hold in this vicinity of around 10-11% for the coming year? And also earlier when we spoke, you were guiding for growth of around 30%. That's on the cards?
Yeah, so nice to be here. And yes, we did have an excellent quarter in regards to margins. This is aside from a one-off, which is really been due to some items where we've been able to recognize on working with clients where we've, in the past had been conservative on when to claim that. So now that that's behind us, you are seeing probably a 200 basis points impact on margins there. As we go forward, though, our product mix and how we're running our operations are starting to have impact on the business. And we've also ramped down a very significant program, which ran about 2.5 years, which was a little bit margin dilutive. And so now going forward, you should see margins in the double digits. We hope to be running the business at 10 to 12% consistently, assuming that we have the absorption needed on that. So our bottom line performance, our outlook is very strong in that regards. From a top line perspective, going forward, again, we have a lot of significant opportunities that we continue to pursue and close, and that will have an impact on order book. There is a timing aspect that goes with that. So our start from a Q1 perspective may be a bit soft in that regard, but overall the outlook with the opportunities and diversifying the portfolio, we are very pleased with.
10 to 12% margin guidance is what you're giving us, and on the top line, 30% is doable?
We're not really giving direct numbers in terms of guidance from a top line perspective. That's just due to the nature of the outlook we have on the business. Again, even this last year, we had one big program that was making 30% of our revenue for many quarters. And so going forward, that will be more diversified. So as we get into the year, we'll be able to provide some more consistent numbers. But we do see this looking good.
All right, because the street, is expecting you all to win larger orders. I'm looking at your order book at around 1,900 crores approximately. And if I compare it on a year-on-year basis, this is the 7th consecutive quarter where you've seen actually a order book degrowth. So they're definitely factoring in larger order wins. Could you tell us what is the pipeline looking at? And the first quarter, as you mentioned, it could be a little softish. So from quarter 2 onwards, you expect to start getting more order wins?
Yeah, absolutely. And one thing we did announce is we announced another new logo. This brings us up to 6 for the fiscal year. And again, these logos are industry leading multinationals, and that's even from new logos. And from our existing business, we have several deals in the pipeline that are maturing, and as those close and turn into purchase orders, you will then start to see that order book start going in the other direction. This year we've been consuming a good part of that due to this very high value, 2.5 year contract that we've discussed for some time. So going forward, I think you'll find a more consistent view on the makeup of the business and across different industry sectors as well.
Okay, all right. And what about how does the mix look like for business? Between defense and aerospace, there's been a bit of a change in the past quarter. What will be the ideal revenue mix you'll be targeting?
Yeah, that is a good point regarding the sector mix. A&D, Aero and Defense, will be our prominent share of our business. But that being said, it is going to come down about 10 percentage points or so of our overall mix. And you're going to see industrial coming in and increasing that. And we also have an outlook on medical increasing as well. And so you will find a more balanced portfolio in terms of industry mix. And then also from a geo perspective, you'll see with our U.S. operations, They bring not only geodiversity, but also that operation is focused more on medical and industrial as well, as far as the top clients there.
So A&D, Anthony, A&D is approximately 60% as of the past quarter. Between A&D, what should the mix look like? And industrials, as you're saying, that'll contribute more. So where do you see that number headed? Towards 20%?
Yeah, exactly. I think A&D will drop at least 5%, give or take. So that maybe even a bit more as the overall percentage. The industrial piece will come up. I think that'll add quite a bit in terms of percentage terms. And medical is dependent on a couple of key deals, but we also forecast that to come up as well as the overall mix. So again, A&D will still be more than half our portfolio, and which is a good thing, that this is a sector that we've had great performance in. But there are some aspects to medical and industrial which give a nice balance in terms of how orders come in, lead times, etc. It allows us to be a little bit more nimble, where A&D can be very long in terms of supply chain and cell cycle and some of these other aspects.
All right, Anthony, final question before we let you go. And no interview nowadays is complete without mentioning US President Donald Trump. What's the feedback you're getting from some of your customers? Are they delaying closure of some of those orders that were in the pipeline? Or is your phone ringing non-stop because people are looking for an alternate to China?
Yeah. So it's a little bit of both. There's no question that we are getting significant interest in our U.S. operations. That in our pipeline there, as far as the number of deals that we are pursuing, has increased quite a bit. So no question that activity has gone up quite a bit. Also, just our core India operations, we feel the China Plus One strategy is kind of in what I call a 2.0 version of it now, where I still think India and how things are kind of progressing, that India is still very favorable in the overall global landscape regarding tariffs. So at this point, we are quite optimistic on the impact of the business that this will have for not only U.S. operations, but also for our India operations. But our clients are also, I think they're also in a little bit of a wait and see approach. So yes, they're quoting. Yes, there's a lot of interest. And I think it's just a matter of time before the decisions on where certain products are made will start to happen. I think that might take another quarter or two before we start to see some direct movement in that regard.
Okay, all right, Anthony, appreciate you stopping by. Maybe by the next quarter, we'll have some clarity in terms of some movement towards y'all in comparison to China, or we'll get a sense about how your clients are going to be behaving. Thanks a lot for joining in. We'll hold you to a couple of numbers, double-digit margin growth, and you're optimistic on order wins coming in from the second quarter onwards.